For a veteran from the market, Vetri Subramaniam, Chief Investment Officer, Religare Investco Mutual Fund, is joining us. Good morning, Vetri. Thanks a lot. Okay, so what will you say? What in the budget will make you give it an A+ or a AAA?
Well, I think it'd be a bit premature for me to figure out what rating the budget should have. But I think
what will make you? What will you watch out for to give it a AAA? Which particular number or policy announcement will make you call it a good budget?
Okay, got it, Lata. Yeah, I think the clear thing that one would like to see in the budget, and let's remember that this is really a statement of accounts of the government, is really some sort of clear roadmap for not just bringing the fiscal deficit down over a period of the next, let's say, 5 years, which is the tenure that they currently have, but also some more specifics in terms of how they would go about achieving this. And I think the economic survey has already sort of talked about some of the issues with our low tax to GDP ratio. So I think, there needs to be a very clear focus on how they will reduce the fiscal deficit. I think the two clear areas that we are looking for direction, one is in terms of how you will bring the subsidy bill down over the next 5 years. And, we were very heartened to see last week that the government appears to have decided that they will continue to use the UID system as some sort of a direct benefits and a cash transfer system to bring down the overall subsidy bill, because we think that's the only genuine way to bring the subsidy bill down over time, as well as for the government to meet its obligations on the social side. Secondly, I think we want to see the overall burden of taxation on business and industry by way of indirect taxes continuously coming down, and the GST is certainly one right step in that direction, but I think it even needs to go to a GST 2 where you remove this cascading effect of indirect taxation on manufacturing, and parallelly we need to go back to the old and original DTC which talked about effectively expanding the direct tax base and also removing a lot of the exemptions which are actually creating their own problems in terms of the government's ability to collect taxes. So I think that's really the medium-term sort of policy framework that we would like to see. I think a lot of the other stuff that people expect for in the budget, it's sometimes not necessarily the place for finance ministers to make statements about their grandiose vision in the budget. We will certainly see some of that, but I think to expect that there will be clear steps in those areas when they've been in power for only 40 days, we need to give them a little bit more time.
Okay, since you spoke about the indirect taxes front, Vetri, first of all, good morning and thank you for joining in. One thing that could perhaps broaden market participation is lowering of STT. Are you expecting that to come through this time?
Honestly, if you're an investor, and I don't understand this issue with the STT at all, if you're an equity investor and you're in the markets for the long term, I think it's a fantastic tax break that you're getting, not just on your long-term capital gains, but effectively a low rate of taxation on short-term because of the STT. Now, I understand there are issues with perhaps the brokers feeling that this reduces transaction costs, but as an investor, and I think this should hold true for any investor you speak to today, honestly, there is no issue with STT in terms of the fact that we're quite glad that we don't have to pay capital gains tax on our equity investments. So I think there's a completely different issue regarding STT, but as an equity investor, honestly, I have no problem with STT.
Okay, Vetri, I know again you're not the short-term trading variety, but the markets have moved almost exponentially since January or even late December. Do you think that the markets for the near term could set its high today if the budget gave what you said, or perhaps it has already set its high? Are we going to see some plateauing now that this event is out of the way?
Well, if you define the narrative in the context of the budget, then that's a completely different story. But I've always held the view that the only way to look at markets are in terms of valuations. And from a valuation perspective, this market is now trading at a 10-12% premium to its long-term average on a trailing basis. The scope for earnings recovery in 2015 is still quite subdued, though I do think in 2016 earnings may be much ahead of what current consensus expectations are. But that means that investors need to have a fairly long time frame in mind and need to keep in mind the risk that the narrative that's driving the market might undergo a change anytime over the next 1 year, 2 year, 3 years, whatever. So I think the challenge for the market is really more valuations rather than just these events in terms of the budget.
Okay, we have Gautam Chacharya as well, who joins in to give us his view on the markets and on individual stocks. Hi Gautam, good morning. I'm going to go straight away to stocks. ITC has lost quite a bit today, and the key number is what that excise duty hike comes at. If it's more than 20%, as many are fearing, what would you do with ITC? If it dips, would you buy it, or do you think the best for ITC is now behind us in terms of the stock price?
Good morning.
Hi.
Yeah, good morning. Again, based on past history, what you've seen across states and in India also earlier, significant increase in taxes, whether it leads to higher revenues or a dampening of consumption over the medium term, that's debatable. It only creates a grey market in the short term. So we still hope and believe that you may not see a big significant increase in the taxes, but if it happens, obviously in the near term it will affect volume growth and it will affect stock price. But if it corrects significantly from current levels, we would definitely be buyers into that.
Okay. Vetri, what are the sector preferences now? Do you think that people choosing should stick with cyclicals because that's where a lot of positives can come from government, or should there be an even greater emphasis on the ITs?
Right. Again, I think the only way to look at that is, in the context of valuations, Lata, and I think, this may come as a surprise to people, but the second most costliest sector in, whether the BSE 100 or the BSE 200 at this point of time on a trailing basis is actually the industrial sector. Oh. And, obviously this is predicated on the belief that this is where the significant turnaround will come. And while we do, buy into the logic that over the next 2, 3, 4, 5 years, it's really the earnings growth in the domestic cyclical businesses which will see a significant delta in case the economy recovers. There is already a high price that we are paying for it. So, I think you need to be a little bit more cautious. While certainly cyclicals are the ones which are leveraged to earnings growth in a positive sense, you need to keep in mind that in many cases the valuations are not so conducive anymore. So for example, we've found valuations in the consumer discretionary side, which is also a cyclical business, a lot more reasonable as compared to say the industrial side. And I think again, in all these cyclical areas, you need to keep in mind the perspective that earnings growth in 2015 may still not see a very significant recovery, and really it's only 2016 and 17 where the earnings growth will come in. So you need to have the staying power to hold these cyclical positions for a extended period of time to benefit from that earnings growth.
Okay. Would PSU banks be your area of interest at all? I mean, valuations are not terribly stretched there, but problems are stretched.
Yeah, I think, when you look at the banking sector, Lata, it's always been our view that, we are looking for banks where essentially they're got a very strong liability franchise, because that we think is the core franchise of any bank. And at the same time, they've got an asset book that is transparent and that is not opaque. Unfortunately, when we look at the PSU banks, on both these fronts, the banks tend to fall short. I think in many of them, the liability franchise is very weak compared to some of their private sector counterparts. And secondly, the asset side of their books has become extremely opaque because of the various policies that they have adopted in terms of restructuring of assets and also in terms of, in some cases, evergreening of assets. So in that kind of environment, it's a little, difficult for us to know what we are dealing with when we look at entities which have opaque balance sheets. And, whether it's a bank or whether it's a non-bank, an opaque balance sheet is an opaque balance sheet. And to that extent, we're a lot more cautious in the financial sector. Our preference is for private banks, but again, it's not because they're private versus PSU, but more because their liability franchise is very strong and their asset side is something which is transparent, so we know what we are dealing with.
Fair point. Gautam, the other big public sector chunk, the oil companies and Coal India, where do you stay on those? Would that be any attractive buy opportunities, especially if and after what you hear in the budget?
Yeah, oil PSUs definitely, because that's one area where getting more and more visibility about subsidies going down gradually. And then the valuations, again, it looks less attractive versus where they were 6 months back. But versus longer term, they still look reasonably attractive. So oil PSUs definitely should be looked at by investors to get into. Coal India is a more tricky one because the stock has run up. Coal volume delta from current levels and impact on earnings we don't know, and there's also the overhang around the entire e-auction thing which we keep hearing from the ministry. Having said that, if we also see progress around the talk about breaking up Coal India, etc., those are things to look out for. But top down, Coal India is not in a top pick. Oil PSUs are in among our top picks.
Okay, Vetri, I'm just gonna, I don't know if I can, but I'll try and squeeze in one last question. On the direct taxes front, Governor Rajan has been pushing for this, increasing the limits for deduction under ATC. Do you think that may come through? And if it does, then how will the government really make up for that loss, expected to be around 30,000 crores?
I think it's difficult, and I think we need to move away from this environment in which every sector, asks for its own sort of tax break for a variety of reasons. So, I think it's going to be difficult for the government to meet those objectives. Having said that, I think the one, thing that we've heard about is that the government may be reconsidering its previous policy whereby, capital gains on housing was tax exempt only if you put it back in housing. We do hear that they may consider expanding the scope of assets to include equities and equity mutual funds within that. If that were to come through, I think that would be a good deal for our industry and for equities, but not necessarily a loss of revenue for the government.
Okay. Gautam, any 2 or 3 mid-cap stocks that you find attractive now?
So from a bottom-up perspective, our top pick, the two top picks for us in mid-caps remains Bajaj Electricals and MCX. So this is X what's happening in the macro, etc. So it is more stock-specific. So these two stocks are our top picks at this stage.
Okay, that's handy. Thank you, gentlemen, for joining us and preparing us for decoding the event that will now unfold, an hour and 15 minutes from now. We'll take a break, and thereafter, ultimately the budget is a matter of taxes and tax announcements and tax details. So a huge tax panel, a star tax panel is with us, HP Ranina, Dinesh, Kanabar, and more joining in to decode the tax rules.
One of the expectations is whether they neutralize those retrospective amendments or not, of course, is something which is a moot question. But certainly some kind of clear policy statement that retrospective amendments will not be resorted to unless, as the Shom committee put it, it is an apparent error.
Welcome back. The markets at this point in time just holding out, not doing anything. If you look at the indices, 0.05% higher on the Sensex, 0.08 lower on the Nifty, and even the mid-caps, 0.2. I mean, for such an high beta sector, really not much movement, though there is a general movement away from the defensives. Aurobindos, Cadillas, ITCs, Just Dials, not the flavor of the day. What's preferred? Gas. I mean, since Gujarat has done a great success of the gas grids, Petronet LNG 3.3 up, and the other stocks, power stocks, PFC is up. Coal India again 1.6% up. People are expecting that something positive can come. Power stocks again, I told you, Tata Power. So those are the ones in which the market is betting. Even JMR Infra, the high beta that got a little beaten today, people are just appearing to either short cover or tank up, expecting of course that gas, infra, power, these are the sectors that could get something. But ultimately, the budget is a statement of taxes, as I told you, and we have the best of tax minds now to tell us what can be the best expectations. Dinesh Kanabar, Deputy CEO, KPMG, is here with us. Mr. HP Ranina, very famous corporate lawyer, as well Mr. Satya Poddar, Partner, Tax and Regulatory Services at EY. Gentlemen, all of you, welcome. Mr. Dinesh Kanabar, let me start first with you. Retrospective tax. So much has been said, written, criticized on it. What is the pragmatic expectation? All retroactive rulings cannot be perhaps corrected right away. You can't lose that many $1 billion. What can be pragmatically expected?
So let me first put what ought to happen in my view and then what is likely to happen. So one very simple proposition is, yes, all retrospectivity cannot be changed, but what are we really looking at? We're looking at section 911, which is the retrospective amendment on Vodafone. Second is 916 and 7, which is the retrospective amendment on royalty and fees for technical services. And really speaking, those amendments ought not to be retrospective. They should not have come in retrospective. Now, just because you have done something which is not required to be done, now if you have to undo, is that something which is a issue which will make a face-saving issue, or what you can collect out of it? So till today, on this retrospective amendment, the government has not collected a dime. There are 20 cases going on. All of them are in courts. They are now in arbitration. So you have a theoretical expectation of collecting taxes, which practically has not happened. Now, in that hope of that theoretical collection, should you really not really bite the bullet and say, okay, I'm going to send a strong signal out? Practically, just given the fact that there is this arbitration, it will be interesting to see how does Mr. Jaitley really look at the whole thing.
Okay, so that's the issue on retrospective tax. But let's go across to our other guest, Mr. Ranina. HP Ranina also joins in. Mr. Ranina, I remember the comment you made when we went to Chandigarh for the investor camp, where you said that the most important announcement will be the roadmap on GST. What is your expectation this time around? Will there just be talk of GST without any timeline, or do you expect a concrete timeline to be announced in the next couple of hours?
Sonia, my own view is that the finance minister will announce 1st April 2015, because I think a lot of water has flown and there's a lot of delay which has taken place already. Now, there will be initial problems, but unless you get into it, you won't be able to determine the problems and sort out the problems. So certainly it's going to announce 1st April 2015, because the IT backbone is now in place and a lot of states have now come under. Many of the states have enough time, next 8 to 9 months, to make the constitutional amendments, and therefore I'm sure that he is going to come up with 1st April 2015 as the date on which the GST will come into force, and then of course take it from there. That's the best way to begin, because sometimes, somewhere you have to make a start, and this 1st April 2015 is the correct date.
Mr. Poddar, I don't want a long list of what industry wants from taxes. Usually before the budget, India Inc. acts like Oliver Twist, asking for more and more and more. Realistically, what can the finance minister do to relieve some tax complexities for corporate India?
The biggest complexity that the corporate India is facing today is not from the system that is in place, but the mess created by the previous government in the 2012 budget through, as Dinesh mentioned, retrospective changes, and more importantly, the DTC, the GST. So all of these areas have created a lot of confusion. Government has not been able to provide certainty and clarity on these reforms. I don't really anticipate, nor is industry expecting anything new, substantive to boost the investment. The biggest boost to revival of investment will be clarity and removal of the confusion created by the past changes. Of course, the government is also promising to de-terrorize the tax system. In the last 2 budgets, the government has brought in many changes which are draconian, very severe punishments, powers of prosecution for very minor violations or sort of infractions of the tax law, and I'm hoping that the government will take suitable measures, which all have resulted in a lot of disputes, a lot of confusion, and the disputes are a good example. There's almost 2 lakh crore rupees of amount of money stuck in the transfer pricing disputes alone.
Okay, you just saw pictures there of the finance minister entering parliament. I didn't want to disturb Mr. Poddar, but those pictures were, I think, self-explanatory. But actually, to continue with that conversation with you, Mr. Kanabar, we spoke to a lot of industry guys just before, and, they were not expecting specifics, but they basically are saying, can you give us ease of doing business? Can something be done? What can he declare visionary-wise and in specifics, practically speaking, today?
So the first and foremost thing is general anti-avoidance regulations. They are set to kick in on 1st April 2014. They were deferred by a period of 2 years thanks to the SHOAM committee. And the Shom committee really, there was a reason why it was pushed back by 2 years, which was to have training, dialogue, etc. None of which has happened. I think a single statement that general anti-avoidance rules are being kept in abeyance, either until things are settled down and a dialogue has happened, or at least for a couple of more years, so that you work out a framework which is implementable, it will be one very strong signal. The other thing, and this is my personal view, and I'm sure that not everybody agrees with it, is that DTC needs to be simply buried. It is not a tax reform according to me at all, because it's just rewriting the law. And when you rewrite the law, howsoever you may think it is simple, it's always going to be a matter of interpretation. I would rather have a law which people have understood, debated, and now accept as being the way forward. I do not think DTC is a tax reform at all.
Okay, well, that's an interesting view, but
lawyer is best placed to do that, Jaitley.
Yes, he is. Mr. Ranina, I just want to come to you on the direct taxes front. Now, what are you expecting? Because, you know, there's an expectation that the government might increase the limits for deduction under ATC to boost financial savings. What all do you think can come through on the direct taxes front?
Yes, I think ATC will be enhanced maybe from 1 lakh to 1.5 lakhs with some other instruments being brought in. That is what I expect him to do. I expect him to slightly increase the initial exemption limit from 2,20,000 to 2,40,000 to take care of inflation. And he may perhaps widen the tax slabs to some extent in order to bring down the tax burden because of inflation. Apart from that, I think the more important change I expect him is to make things, rationalize things about the special economic zones, because as you know, Mr. Narendra Modi is extremely keen that the SEZ model be promoted and be pushed to the maximum possible extent. So there are a lot of issues on that aspect which I think he will streamline and give some more incentives, because he has now announced that there will be special manufacturing hubs which will be set up. That will help the corporate sector. It will revive the growth sentiment. Okay. And I think generally people will accept this type of change, because this is what people have been talking about.
Okay. One word answer from all three of you on MAT. Mr. Kanabar?
MAT is here to stay. I don't think it's going to go away. What needs to happen?
Will they reduce?
They need to reduce, and probably they need to look at whether in respect of a special economic zone, it's really tantamount to a backdoor taxation. So it should go away for SEZ and it should be reduced for everybody else.
Mr. Poddar?
My view is that government has to provide a new roadmap on the GST.
No, sir, on MAT.
On
MAT, sir. MAT.
Oh, sorry.
Yes, no, reduce.
On the MAT, I don't think the government will have the time to announce any major changes in the MAT. Okay. All that can happen is if the corporate tax rate is lowered over time, and the government has indicated in the economic survey the need for reducing the overall corporate tax rates. Only in that context MAT can be modified, but not in the current environment.
You expect that, Mr. Ranina? Anything on MAT reduction at all?
No, I don't expect any reduction on MAT, but possibly on the DDT, on the dividend distribution tax, and then try to rationalize that. So MAT and DDT will be looked at in the same vein, and therefore I think he will try to, create a situation where people will be able to invest more money, and those who invest more money will get some type of benefit in terms of both MAT and DDT put together.
Okay. Gentlemen, we won't take away your time now, because we will need a lot of your time after the rules are announced to know whether we are richer or poorer or how we shape up. Thank you very much for joining us now.